The future of luxury. Will brands like Rolex and Lululemon survive? The luxury market, a potential downfall. Luxury brands like Rolex and Lululemon may seem like the first items people would cut back on during economic downturns. But surprisingly, this hasn't been the case on a large scale. The wealthiest individuals in the United States have generally fared better in recent years compared to those facing financial struggles. While some high-income earners express concerns about job security, many are still benefiting from favorable long-term tax incentives and other advantages. However, the luxury market appears to be teetering on the edge of instability. This precarious situation could result in a significant decline, potentially affecting numerous brands that are not considered necessities. For instance, while a Burberry scarf or Lululemon yoga pants may be desirable, they are not essential items. There are plenty of more affordable alternatives available, which brings us to the topic of dupes. These are legal imitations of well-known brands that closely resemble the originals. Cody Klein from The Street frequently discusses this phenomenon. She recently joined her cousin Daniel Klein and Alicia Dos Santos on the Street Smarts podcast to delve deeper into this issue. I'm Dan Klein, and you're tuning in to the second episode of Street Smarts, the podcast from The Street. Today, we'll explore a few topics, particularly focusing on consumer purchasing behavior. Cody, many of your articles cover luxury brands that I may have heard of but don't personally own. As we discussed last week, we're in a challenging economic climate where even those who are financially secure are exercising caution. What trends are you observing? Are you noticing a pullback in consumer spending on these luxury brands? I recently traveled to Alaska, and one of my companions was eyeing a watch that cost more than my car, showing no hesitation in considering the purchase. Meanwhile, I found myself browsing the swatch section. Are consumers becoming more cautious? Or is it a different story for the affluent 1%? Cody Klein, if you had asked me this question last quarter, my response might have been different. Recent data indicates a slight decline in sales and profits for luxury brands. However, a wave of earnings reports is set to be released this week, and I'm eager to see the outcomes. Interestingly, I have two examples that caught me off guard. For instance, Burberry sales in the US increased by 4%. Yet they experienced a downturn in China, which was unexpected for me. Daniel Klein, can you explain Burberry to me? My only familiarity with the brand comes from a professional wrestler who sports a Burberry scarf. Is the brand solely defined by that pattern? Cody Klein, not at all. While the iconic pattern is a significant part of their identity, Burberry offers a wide range of styles beyond just that. The brand initially gained fame for its scarves, but they have since expanded their offerings. For example, I own a black jacket from Burberry that doesn't feature the check pattern. They are currently undergoing a substantial transformation, aiming to blend modernity with their heritage, which is a challenging balance to strike. I believe they can achieve this, as I am a fan of Burberry. I have a jacket and a scarf that I've cherished for nearly a decade, and they remain in excellent condition. I support Burberry's efforts to modernize while honoring their heritage. The duplication dilemma with Lululemon. This brings us to a significant topic. Dupes. I only learned about dupes a couple of months ago. Essentially, a dupe is a legal imitation that closely resembles a name brand without crossing any legal boundaries. For example, Target has a yoga line that mirrors Lululemon's offerings, but at a lower price point. I've practiced yoga extensively, yet I've never worn yoga pants as they don't suit me. Can you share your thoughts on why you choose Lululemon over a quality knockoff? Cody Klein, I'm quite passionate about this topic because I've conducted a personal experiment over the past decade. About 10 years ago, I purchased 3 pairs of black Lululemon Align leggings, which I still wear today. They show minimal signs of wear and tear, fit perfectly, and feel great. A few years back, a friend introduced me to a dupe available on Amazon. At that time, the Align leggings didn't have pockets, but this dupe did. Initially, leggings should never fall down, regardless of weight fluctuations, and that's precisely what happened with these dupes. In my experience, opting for dupes can lead to spending more money in the long run. It's akin to the analogy of a man who invests in a high-quality pair of boots that lasts 10 years versus someone who buys cheaper boots annually, ultimately spending more. Daniel Klein, I'd like to chime in here. While I'm not a fashion expert, I can relate to your experience. I'm currently wearing an Under Armour shirt, and I've noticed that a similar shirt from a discount retailer like JCPenney tends to look worn out and pilled within 6 months, despite minimal wear. Additionally, I believe women often invest in swimsuits because of the variety in sizes and styles available. For men, the choice is simpler, but purchasing quality shorts can significantly reduce discomfort compared to cheaper alternatives. Spending $64 on a quality pair versus $18 on a lesser brand is a wise investment. However, I do have one exception. For items I know I'll likely lose, I prefer to buy the cheapest version available. Retail insights, supermarket inflation. Beef prices are rising while egg prices are declining. Levi's strategy. The company has plans to navigate tariffs and maintain affordable holiday pricing. Amazon's pricing strategy. Shoppers are surprised by Amazon's subtle changes in pricing related to tariffs. When it comes to travel bags and similar items, I often opt for free items I've received from cruise lines. For sunglasses, I keep one quality pair for on-air appearances, while the rest are inexpensive pairs that I know I'll misplace. Alicia, as a parent, do you prefer name brand clothing for your kids, or do you opt for more affordable options? Alicia Dos Santos, I rarely purchase name brand items for my children. We often shop at Costco, which offers better brands than what you might find on Amazon, all at reasonable prices. We also enjoy thrift shopping for kids' clothes, teaching my daughter that she doesn't need to have the latest name brands or new items. She can discover unique pieces at thrift stores. Daniel Klein, my son loves thrift shopping because he often finds well-known brands. Personally, I struggle with the idea of wearing something previously owned by someone else. Cody, do you ever shop at thrift stores? Cody Klein, I've recently started thrift shopping because I found some jeans that are a bit pricier, but worth it. Being short, I often need to have items altered. I've also been purchasing from Poshmark, which has been a great way to acquire name brands at lower prices. However, like Alicia, I wouldn't invest in expensive items for children who will outgrow them quickly. Unless I plan to have multiple children, I wouldn't buy something intended for long-term use. For adults, however, I agree that Costco is a great option. Daniel Klein, I shop at Costco as well. Alicia Dos Santos, go ahead, Dan. Daniel Klein, I'll share my appreciation for Costco. Although I don't live near one, I'm a huge fan. However, I often leave with items I didn't intend to buy, like a suit I'll rarely wear or a teddy bear. The temptation to purchase something simply because it's a good deal, even if it doesn't fit into my life, can be quite challenging. Luxury market recovery, key trends, and challenges ahead. The landscape of luxury shopping is currently navigating through a complex recovery marked by 4 significant challenges. Imagine standing before the striking 19-story Louis Vuitton store in Manhattan, designed to echo the elegance of their iconic monogrammed trunks. This grand facade captures our attention, but beneath the surface, the luxury retail sector is experiencing a tumultuous phase. Despite the hopes for a much-anticipated resurgence, high-net-worth consumers are presenting a rather mixed narrative, with ongoing sluggish sales impacting company forecasts. In a somewhat paradoxical turn of events, LVMH, a pivotal player in this industry, delivered results from the second quarter that were not as dire as anticipated, resulting in a boost for luxury stock prices on Friday. Investors seem to be betting on the potential signs of recovery emerging from the data. LVMH reported a 4% decrease in sales year-on-year, reaching €19.5 billion, which was slightly worse than the expected 3% decline. Deutsche Bank's luxury equity analyst Adam Cochran commented on the situation in a note, saying this was not a stellar quarter for LVMH. However, we do observe some hopeful signs, with a sequential improvement in constant currency sales projected from the third quarter onward, primarily with most sales declines attributed to lower tourism activity. As earnings reports continue to roll in, let's delve into 4 pivotal trends that deserve attention, especially with fresh financial figures expected next week from brands like Kering and Hermes. Number 1. Declining performance in Japan. Luxury brands are constantly grappling with foreign exchange fluctuations. But this quarter, the stakes are even higher due to last year's strong sales comparisons. A drastic drop in the Japanese yen had previously an invigorating effect on tourism and luxury retail sales in Japan back in 2024. However, many brands are now experiencing a rebalancing phase. For example, Richemont reported a staggering 15% downturn in sales in Japan for the quarter ending in June, contrasting sharply with the phenomenal 59% growth recorded during the same time frame the previous year. Similarly, Burberry described the performance in Japan in the second quarter as challenging, and Moncler indicated that Japan was its sole market in Asia showing negative results, although they did not disclose specific figures. Interestingly, some brands have noted that the dip in tourism to Japan has coincided with a rise in domestic spending in various other markets. LVMH's chief financial officer, Cécile Cabanis, highlighted this during an earnings call, stating, "We have observed significant improvements locally in China. This comes in the context of a repatriation effect from the substantial decline in tourism to Japan." 2. Surge in US sales. In contrast, several luxury companies have pointed to a notable rise in sales within the United States during the second quarter, even as consumers are left speculating about the forthcoming impact of tariffs. Brands like Burberry, Richemont, Moncler, and Brunello Cucinelli have all reported an upward trajectory in their American sales figures for this period, whereas LVMH noted that demand in the US remained broadly unchanged. Yet it remains unclear whether the increase is driven by US consumers hastily making purchases to beat impending tariff implementations. Moncler's Chief Business Strategy and Global Market Officer, Roberto Eggs, expressed uncertainty on an earnings call, stating, "Honestly, I cannot tell you if this spike in buying behavior is predominantly linked to tariff expectations." Luxury brands have been increasingly focusing on the US market in recent quarters as they attempt to counterbalance the tepid demand in the essential Chinese market. Burberry's CEO Joshua Schulman remarked that their growth in the US illustrates the diversity of luxury consumers in that market, which spans from extravagant high spenders to affluent shoppers frequenting major malls. 3. Price adjustments on the horizon. Nevertheless, the looming spectre of US tariffs poses a significant challenge for many European luxury houses, which depend heavily on localized production, a crucial aspect of their brand prestige. As a result, numerous luxury brands are contemplating necessary price hikes in the upcoming quarters to counterbalance escalating costs. Brunello Cucinelli indicated potential price increases of 3% to 4% in the US, while Moncler mentioned they would be implementing mid-single-digit percentage rises over the next year. Burberry, on their end, reported that they began adjusting prices the previous year as part of broader revitalization strategies. LVMH, in contrast, stated that any price increases will need to coincide with enhanced product quality or a careful approach towards inflationary adjustments. However, the luxury conglomerate did acknowledge that price hikes could serve as one of several strategies employed to mitigate the tariff effects. For context, Research from UBS has indicated that the average price of luxury goods has surged by approximately 3% thus far this year, the slowest growth rate since 2019, reflecting brands' attempts to balance consumer loyalty with rising production costs following the post-COVID inflation spike. The prevailing mix of product categories remains a fundamental element in understanding the dual narrative within luxury markets, as brand appeal is equally critical as the specific product type. Jewelry continues to stand out as a strong performer for Richemont, even while the high-end watch segment has shown weakness, not just for Richemont, but across various luxury brands. On the other hand, LVMH is grappling with underperformance in both its jewelry and fashion segments, despite the robust demand for leather handbags, particularly with ultra-luxe brand Hermes. According to Carol Maggio, Barclays head of European luxury goods research, she anticipates this trend of leather goods dominance to persist when Hermes announces its upcoming figures on Wednesday. Hermes consistently excels, primarily due to their prowess in leather goods, she stated during an interview. As investors keenly await more insights from Kering, parent company of Gucci, regarding its product evolution under the leadership of artistic director Demna Gvasalia and incoming CEO Luca De Meo, the stakes are high. Maggio offered her perspective, noting, incorporating fresh and innovative elements that haven't been seen before could potentially restore Gucci to its former glory. But here's the burning question. With these dynamics at play, how do you see the future unfolding for luxury brands in varying markets? Do you agree with the analysts' perspectives, or do you think there's something crucial they're missing? Let's discuss. Luxury brand sales slump, temporary or serious? Luxury brand sales slump, a temporary blip or a sign of deeper troubles? The luxury industry is facing a sales decline, but is it just a momentary setback or a more serious issue? Bernard Arnault, the billionaire owner of Louis Vuitton and over 70 other high-end brands, believes this slump will pass. If he's correct, now could be an opportune time to invest in LVMH stock, which has dropped by a fifth this year. Arnault himself has invested over $1 billion of his own money in the company's shares since January. But here's where it gets controversial. Some analysts argue that the luxury market struggles could be more than just a fleeting trend. With economic uncertainty and shifting consumer preferences, the future of luxury brands remains a topic of debate. What do you think? Is this a temporary dip or a sign of deeper problems in the luxury industry? Voice your opinion in the comments below.